Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told. Futures contracts never fold, in profits we behold. Buy low, sell high, money stacks, touch the sky. Market rates, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Flip and tick every day, watch the numbers sway and sway. Brokers scream, they light the night, every tick a gamble right. In this game we found the light, trading life our appetite. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Flip and tick every day, watch the numbers sway and sway. Brokers screams, they light the night, every tick a gamble right. In this game we found the light, trading life our appetite.
Well, good evening, folks. Evening, if you're in the evening, or morning, wherever you are. Just checking the sound. Well, good evening, folks. Yeah, that seems to work. Evening, if you're in the evening, or morning, wherever you are. Just checking the sound. Right. Welcome to the live stream, everyone. We start in about a minute or just under. Just checking that the sound works. I always do that because I get into a panic about the technology. We're going to start off with these pages from natural gas intel and natural gas news and so on. Have a look at some of the news, and then we'll have a look at the charts straight after that. I'll also cover a couple of other things if you want to, once we finish with natural gas. And I'll also record this video and put it up as a separate natural gas video if you didn't manage to watch it during this live stream. So, and also I've been doing a lot of live streams because I'm busy getting my swing trading blueprint course ready, which will be ready in the first week of September, ready for launch. There's a link below to get onto the early bird list. Make sure you don't miss out on that. As soon as I finish this, we'll carry on. Once I've launched the course, we'll carry on with our regular videos as normal. Right, let's go and have a look at what we've got on the page now that we've got all that out of the way. I've got the natural gas intel, just the story of the day. It's always good to catch up with what the news headlines are. And this one says natural gas futures deflate as forecasts for ballooning hot air face skepticism. And cash prices mixed. September NYMEX natural gas futures early attempt to extend a rally into Tuesday's session failed, as we saw, amid expectations for demand weakness, as weather outlooks pointed to increasingly mild conditions across major natural gas consuming regions. So a bit of a turn down in demand, it seems, but still pretty much of a mixed picture. And this is from Natural Gas World. Just a couple of interesting things on the right-hand side of this page. Just these scrolling headlines. some deals with Japan, some news on Australia. There's just one that sort of caught my mind here. That's this one. LNG is not the marine fuel of the future. It's the marine fuel of today. Global gas perspectives. I'm not sure if I can get into these articles because I'm not actually subscribed to Natural Gas World. Actually, maybe I am subscribed to it. I think I just resubscribed. Oh, no, I didn't. Anyway, so there we go. It's all about natural gas. Is this an interim fuel or is it today's fuel? An important part of the blend with green energy talks and so on going on. It does cut down on emissions, as this says. It's not a perfect fit. It cuts down on carbon, SOx and NOx emissions. Although there are leakages which create problems with natural gas. That's the main concern, is the leakages of methane to the atmosphere. So not a lot to go on there, but just some headlines and really pretty much mixed bag and very quiet across the sort of news sectors here. There's that article we just read. Australia achieving net zero with natural gas. So a bit of an interest in natural gas. So move away from other fossil fuels perhaps, and this ongoing idea of whether natural gas is a transition fuel or it is actually an important fuel. Let's look at the futures here at barchart.com. Have a look at the spot price. It's just about $2.20, 2199. September futures price 2.205. October 2.34. November 2.71. And then only in December do we get above $3, 3.22. These have all shifted up slightly in the last number of days since we had that little bit of a rally. And these will all move in tandem. So the fact that we're capped at around $3 between November and December doesn't mean that we'll be capped by the time we get there. We could be at $5 by the time we get there. We could be at $7. Unlikely, but we could be. So that's the way it looks on the futures over here, just sort of extending slightly higher towards the end of the year, then dropping off a little bit. Now, I want to see if we can get the COT report up here quickly and have a look at what's going on just very briefly. I haven't prepped for this COT report here today. It's normally what I'll do a little bit later on today during this next session. I'm trying to find out if we can get it, and I don't know where it's gone. Maybe we can't get it here. Yeah, so there it is, actually, a seasonal chart. Just looking at these numbers very quickly, commercial positions added, well, took some off the long side and took a little bit more off the short side, slightly more long than short on the commercials. Producers 226 versus 279, so pretty balanced, a little bit off on the long side and the short side. And the managed money 222 versus 283 to the short side, so slightly to the short side, significant actually. And then the adjustments 13,000 off the long side and only 5,000 off the short side. So leaning slightly towards the short side on the managed money side of the COT formula. But the swap dealers and the hedgers, let's see where they are. Non-commercials 307 short, 388, so pretty balanced. And then the swap dealers 159 long versus 43 short. Now they're opposite in direction normally to the way the market's going. So the fact that they're long means that they think this market's going to go short. So, but a bit of a mixed bag, really pretty equal on both sides for commercials, producers, managed money. Just the swap dealers signifying a sign of slight concern, really, in that we are angled more towards the long side on the swaps. So in other words, expecting the market to go short. And that's all of that. And then I'm just hoping you can all hear me. I'm sure you can. If you can't, put something up in the comments. I'm looking at it on the other computer. And then just going across to here, I did put some charts up on X on NatGAS over the last couple of days, but it's best to go to the charts. So let's go across to the charts. And in order to do that, I'm going to have to switch screens here, if you don't mind. And you're going to look at me for a little bit. And I'm going to share a different screen. It's a little bit clunky, and we should have the charts up here shortly. Yeah, there we go. Right, now let's have a look at the natural gas charts. And again, once I've finished with natural gas, if there's something else you'd like me to look at, please let me know. We could look at some of the other energies like oil, uranium. We can look at TLT, some of the softs and the grains and commodities, things like coffee, cocoa, orange juice, sugar. Then, of course, stocks and Bitcoin. And gold, all interesting. We've got trades on many of these instruments at the moment, stocks too. And then also on the currencies, I know those who are trading the euro long short rather, and the pound short have been struggling and suffering a bit as the dollar index has come off. The fact that the dollar has come off a bit has also added a little bit of strength into things like natural gas and oil, as they're priced in dollars primarily. Right, let's have a look at the charts, and we'll start with this day chart on natural gas. This is the one that you're most familiar with and that we've looked at many, many times now, going back months and months and months. And this has really not changed since yesterday. We did a video on natural gas, not yesterday, the day before, I think. And really, we haven't moved at all since then. We're still trading at 2.2 on the futures here, trading at the NYMEX, the Henry Hub futures. So still trading at 2.2. The spot price is also at 2.2 at Pepperstone, which we'll have a look at shortly. If we look at this on the 4-hour chart, actually, before we go to that, let me just recap what we've done here. Basically, we've bounced off. We've got this triple bottom, just to recap. We surged up from there up to about $3.20 or so. We've come back down to this gap here that was a rollover gap. During the rollover from the April to the May contract, created that big gap. We came back to retest it, didn't completely fill that gap, actually. That's a bit of a concern because we didn't get down to $1.83 or 84, the bottom of this gap. We only got as low as $1.88 on the futures. So still a 4 cents difference between the bottom of this gap and where we got to. However, we did bounce. We broke through these two trend lines, and we're holding now beautifully above the 20-period moving average on this day chart. So what does it look like on the 4-hour chart? Let's zoom in. And you can see we're above all of the moving averages now on the 4-hour chart. There's the 100, this gray line. There's the 200, the purple one. And the red and the green one, the red line is the 50, the green line is the 20. And they're on top of each other. And we're above those as well at the moment and just poking up. What I don't like about this pattern is this potential diamond pattern or even an expanding pattern. Let me explain this to you by drawing in some lines. And let's see if we can find this. Let's go with the disjointed channel, first of all. And it's really something like this. This is a reversal pattern, and it's an expanding pattern or a megaphone or a trumpet, doesn't matter what you call it. And I don't like this. It's a reversal pattern. We're at the top of a move from the bottom upwards. So the move has been long and the reversal pattern is potentially a short. However, these patterns only work out about 70% of the time, particularly this expanding or trumpet or megaphone pattern works out about 70% of the time, which means there's still a 30% chance that this will break out through the top. However, it's just a little bit of a concern. I'm not saying this is going to form. It may or may not. The other thing it could actually form is something like a diamond pattern, which is, or a lozenge, if you want to call it that, which is also a reversal pattern. And I'm going to draw it in like this so you can see more easily. Just draw these black lines in, something like this. And as you can see, that forms this diamond lozenge pattern in the middle, in between these four lines. And that's also a reversal pattern. So it looks exactly like a diamond or a lozenge, and we make higher highs and then progressively lower highs. We also make lower lows and then progressively higher lows, making this diamond formation. So that's also a potential reversal. I'm not going to leave these lines in because we kind of know what that looks like, but it's just something to bear in mind that that we're looking at. However, having said that, we're looking pretty constructive. As you saw on the day chart, we're holding above the 20-period moving average. We have done so now for several days in a row, maybe 5 or 6 days. We're also holding above all the moving averages on this 4-hour chart on the NYMEX futures price, the Henry Hub futures price at the NYMEX. Now, let's have a look at the 4-hour chart on natural gas, because this will give us a little bit more of a clue on the spot price. Now, we've got a very similar pattern. Notice that the spot price here on Pepperstone, it's not actually the real spot price of natural gas. It's their spot price, or their non-rollover tradable price, if you want to call it that. But it's not just literally the spot price. It's combined. It's a combination of the front month, future months, and the cash price as well, combined into a single number. Just so happens this is also at 2.1, 2.19, call it 2.2. Very similar pattern to what we saw, holding above all the moving averages, and also this channel top now that we've eventually broken back out through the top of, which is good news. Remember, we traded within it for a while. We then broke down through this channel, bumped up against it from underneath many times, eventually broke back into the channel, Then we got out through the top, fell back inside, and we're back above the top again. So that's all quite constructive on a 4-hour basis. And it looks constructive on the day chart as well. Actually, I'm going to put the day chart up on this Pepperstone chart as well. It doesn't look any different to what we've just seen over at the NYMEX chart on the Henry Hub price. And there's the 20-period moving average, the green line below us. And we're holding above that quite beautifully. We have been above it for now 1, 2, 3, 4, 5, 6, 7, 8 or 9 days. We're also above that channel top. And this pink order block zone, we're above there as well. And we had that big bullish candle 2 days ago. Very good, beautiful bullish candle. Not only is it a bullish engulfing candle, but it's also a piercing pattern. In other words, we made a new low compared to the previous day candle before that, and then reversed and engulfed completely the entire body of the previous candle. That makes it a piercing pattern and an engulfing candle, which is all very bullish. So it looks good on the spot price at Pepperstone on both the day chart and the 4-hour charts. Looks good on the 4-hour chart over at the NYMEX, showing the Henry Hub price. However, if we do not hold this pattern and we have to revisit the bottom, the first port of call will be back down to about $2.05. That's this green line. And it's also where this megaphone pattern bottom is. We could actually get down to $2.04, somewhere around there. I did point out when we were moving down a couple of days ago that was a potential target for this to move down. We didn't get as far as that, but we probably should have. And we may have to actually revisit that one more time. I don't know. It's also a very key area. It's the $2 level. It's the top of the start of the bargain basement level, I suppose, coming out of the dollar store region. And switching back to the day chart, that, I suppose, green line and the purple gray block beneath it represents the entry area into the dollar store when it's below $2, $1 something. We're still well above there, but we may have to, I don't know, test the top of that and then bounce up again. If we don't manage to hold up above these levels, and particularly the squiggly line, and particularly the bottom of that rollover gap, and that was at 1.82 thereabouts, we could still get to the bottom of that rollover gap and remain bullish. That would take us down to the Fibonacci, the rollover gap, and potentially down to a newly formed trend line. As this purple trend line begins to drift down, we may have to touch, not newly formed, but I suppose newly revisited, touching the top of this purple trend line as a revisit. We have not revisited these trend lines properly yet. We may have to do so, but I think that's the least likely scenario, and I think we're more likely to carry on moving up from where we are at the moment. So that's all on natural gas, folks, and I hope you found that useful. So we're long on natural gas. My last entry was at around about, I think just below $2. Average price at about $2.09 roughly. I'm looking for this to move up to $3 and maybe $3.40, 50, 60 or 70, somewhere in that region. Along with natural gas, I'll be watching the energies like uranium and Brent crude very closely too. We've now exited our short trade on WTI, and I'll be looking to resell this on a bounce if we get that chance. If not, and we carry on moving down and break below this current recent swing low on WTI, I'll be looking to resell this on a swing back up from underneath, a retest of that breakout point if we do get there, and a bounce off that downwards again. I'll be looking to resell WTI. Targets are around about 50, low 60s, maybe into the 50s, and maybe even lower. And we're also long on uranium and UEC. Our last entry price is right at the bottom. We also have slightly higher entry prices on both of these too. And that's all the energies, folks. I think that's all we're going to cover today, unless there are any other questions. Let me have a look back at my console here to see if there's anything. Now that you're in, questions are welcome. That's your chance. I'll finish this off in about 5 minutes from now if there aren't any further questions. Good day, Gabriel or Gabrielle. Good day, WeVibe. I'll just say hello to everyone whilst you gather your questions. Good day, Rebel TY. Glad to hear. Good day, WeVibe. Always nice to see you here. And regular. Good day, Eva. Nice to see you. And Gabrielle. Nice to see you, mate. Thank you very much. F. Canaan, gas is dropping. I don't think it's dropping at this stage. And Sean May, welcome to you too. Whilst we're here, I'm going to go through these charts very quickly. This is not part of what I was going to do, but let's have a look very quickly at what we've got going on currencies. The euro just powering up, really. I did think that we were going to get the dollar moving down. If you've been watching my videos and last live streams, we've been looking to sell the dollar really in general since we broke down through this trend line. We did buy the pound. We got out about halfway up through the move. We didn't get the entire thing. In fact, we got not even halfway, I think about a third of the move. We didn't get the rest of the move. I didn't expect it to move up so dramatically, or for the dollar index to move down so fast. There's the 20-day moving average on the dollar index at 103. We're currently at 101.50. So we've got 150 points above us before we even retrace to the 20-period moving average. And the 50, 100, and 200 all above this trend line above us here. So I think we could get a bit of a pullback on the dollar. Generally, whilst we're below this trend line, let's have a look at where that comes from. It's a long-term sort of trend line, looking a little bit neater now because we've tested it for the third time and failed. And generally, as long as we're below that line and that red order block there, I'll be looking to sell dollars. We are short on the dollar yen. We took most of our profit on the dollar yen at the bottom of this last move. We resold there at the 20-period moving average, and we're just holding on to that for now. So our original positions, we fought this for quite a long time. We've been buying and selling, hedging, buying and selling and hedging all the way up here, not making any progress at all. And then this whole market turned around. We managed to get in. We kept our shorts. We managed to unhedge and got a really good profit on the way down. And after that bounce, we took all of our profit basically, and resold this bounce to the 20-period moving average and the underside of this trend line, looking for this to move down. So that's the only thing we've got on currencies at the moment. Stocks, we're short NASDAQ, S&P, Apple, Palantir, NVIDIA, all at roughly the current prices. You can see the prices on the chart there. Palantir got a bit out of control, but I only have a tiny position on this one. And I'll be looking to add or do something, might have to hedge this one. It's a very small position, so it's not really very important. But if we do move down and start to form a proper reversal here, I'll be looking to add some more to that short position. NVIDIA, generally short to 100 and below, as we've already been down there once. I think we can carry on moving down. Generally, what are we going to see on stocks? Well, we've had this tremendous drop-off and incredible pullback beyond 78.6% in the case of the S&P, and not quite 78.6% in the case of the NASDAQ. Is this just a blip in the market, and are we going to surge on higher, or is this the start of a much bigger correction? I don't think anyone really knows. I've been listening to a few videos recently, this morning, from a couple of experts on one of them working at Bloomberg, one of them at JP Morgan. And one of them says long stocks, one of them says firmly short stocks. I'm not going to say which ones, but I think you can guess. So I'm in the camp of I have no clue, but I'm going to bet on this last move, this big move where the VIX got above 60. Everything went chaotic. Bitcoin fell through the floor, and I'm working on that until that's proven otherwise, as being the start of a bear move. And we'll have to see if that plays out. Now, going across to Bitcoin, we're still long on Bitcoin. I'm not too happy with the way this is looking, and it really needs to get moving now if it's going to. Look how long we've been in this consolidation, really, since that surge up in February. We're now almost at the end of August, and we've been stuck in this huge broad range between about 72,000 and 52,000. So $20,000 range that we've been trading in for most of this year so far. Now, we broke down through there. We got long on that spike low. It formed a classic pattern, reversal pattern, fake breakout through the channel bottom, bounce back up again. We did exactly the same thing on this much smaller channel a few days ago. This is the day chart on Bitcoin at Coinbase. So we've got this big bull flag, if it turns out to be that. So far, not yet. We've got to break through the top of that to confirm that it is a bull flag. But within that big bull flag, we've also formed this baby bull flag. I was going to say baby bear flag. It's a baby bull flag. And this little, I saw sort of, I suppose, fractal of the bigger move, a Mandelbrot type fractal, did exactly the same picture. Formed the flag, spiked through, fake break through the bottom, bounce back up again, and moving up towards the top. So yeah, and first of all, this little pattern's got to resolve. Then the bigger pattern, if we can get up and close up through this mini flag, and then get up and close above that bull flag, the big one, then I think we could get up much higher on Bitcoin. And I'm looking at about 100,000, give or take $10,000 on either side of 100. And that's Bitcoin. We're also long on gold. We just got long this morning, our last little bit. We've been buying gold all along. Looking at this day chart, our first most recent position, there's a couple of the most recent ones. We got long at about 2.2, got long at about 2.3 and 2.350, 60, and now we've just got long again at about 2.5, 2,500, I think it was precisely, or 2.504. 2.505 thereabouts. We're at 2.512 now, so we've just moved up into a little bit of profit. I think gold could get up to about 2,700, maybe 3,000, maybe 3,200, but I think we'll start at 2,700, maybe 800, somewhere in that region as a target before potentially we get a big pullback. I think gold and Bitcoin will trade in a pretty similar way. So if we get a wiggle on gold, I think Bitcoin will get encouraged and vice versa. And then the only other things that we're looking at currently at the moment, we're long on TLT. Got long a few days ago on that. There's our trade. It's currently open. There's our entry position at this green arrow. We're up there now, and we're into some profit on that. That's looking pretty good. Target for TLT, I've got an arrow drawn in here. This green arrow take us up to around about 140. We're currently trading at 98. So about a 40% increase, but potentially. I think it's not going to be one way, of course. I think we'll see some curves and bends and moves along the way, but so far that's looking pretty good. And I'm developing quite an affection for this trade, and I think we're going to put some more on and try and really ride this one and get some decent profit out of this if it keeps moving in our direction. And then, as I said, we're looking at softs and grains, sugar, cocoa, coffee, corn, cotton, orange juice, wheat, and soya beans. My positions on these hedged on sugar now. I went long, very quickly hedged it yesterday. Nothing on cocoa, looking to sell for a path like this on cocoa. Nothing on coffee, looking to sell at some stage or maybe buy, I don't know. Not prepared to take a trade. We're hedged on corn. We went long just above that orange arrow and then hedged immediately. We're also hedged on cotton, very similar. So these are very tight hedges. I wasn't willing to let these run away from me, and I'll adjust those hedges accordingly. We're also long on wheat and soya beans, and both of those are unhedged, and both of those are in a small amount of profit so far. So that's it all on the softs and the grains. And I think that's it, folks. Oil. All right, a couple of other questions. Dr. Patel. Nice to have you, Doctor. Hi, James. Hey, James. Thanks much. Is there a level that you put a hedge on natural gas? Not really. Not around the $2 level, Dr. Patel. I'd be looking to hedge it. I don't think I'm looking to hedge this at any point right now. I think there's a good chance that we'll move higher, and if we don't, I'll simply look to add more positions on. If we can get down to about 1.9, 1.8. I don't think we're going to get to 1.5 again, but if we do, I'll simply be looking to add more positions. Then it's really, really cheap, back into the dollar store region. Anything around $2 or below is, for me, generally, I'm not saying I won't hedge, but generally it's mostly just to buy. It's very different once you're above $2 into the $2.50, $3, $3.50 region. Then you're trading in both directions, especially in the $3 to $4 region. Then I'll be looking to hedge very quickly on trades in general. So yeah, I hope that kind of answers that. All right, Gabriel, what are your thoughts on oil? Yeah, so oil, I did cover this briefly just now. Basically, I'm looking for this to move down, but I'm not sure where this will bounce. If it does, there are positions that we've taken so far, and we're now out of oil. We have no positions on this, but I will be looking to sell rallies, and it's not inconceivable that we could get a much steeper rally all the way back up to the top of this trend line. We've only had really one touch. In fact, this line's not really that good. Let's redraw it. Let's have a better look at oil and draw a neater channel. Yeah, so it's not inconceivable that we could get back up to the top of this red channel. It's not the best channel. We don't have a bottom. We've only got 1 point on the bottom. So the bottom line is drawn in relation to the top line only. It's meaningless at the moment. But if we do get down to the bottom line, by the way, to the bottom of that channel, that will be into the 50s. low 50s to mid 50s, something like that. But yeah, so we'll keep an eye on that channel. But what I'm saying, it's not inconceivable that we could retest the top again and make another new turning point at the top of the channel, and maybe even just break through it and get back into the range, back into the sort of low 80s. But generally, I'm looking for rallies to sell into. If we do break and close beneath this level here at about 72.5, and then move down and then break back, retest at something like this, perhaps. If we did something like this. Okay, I'm drawing with my mouse, so it's a mess. Sorry about that. But something like that, then I'd be looking to maybe sort of sell into that region at about 72.5. So either looking to sell there, or perhaps looking to sell somewhere up in that region over there on oil. Yeah, so that's generally my feeling on WTI. Same for Brent crude. Actually, if you look at Brent crude, you'll see a very similar pattern, slightly different price. We're at 76.8. But also not quite getting there. There's the bottom. Yeah, I think we might just get a little bit of a bounce on Brent. I don't know. A lot depends on industry. A lot depends on what's going on in the Middle East and Ukraine. And talking about Ukraine and the Middle East and oil and natural gas, it's really confusing now. Who's supplying natural gas to who? It's sort of disintegrated into this free for all in wartime economies, backdoor deals, and I believe there's an awful amount of natural gas moving from Gazprom in Russia into Europe, even though it's not meant to be, or something. And yeah, so who knows what's going to happen with oil and natural gas, considering those two wars that are going on. A couple of interesting things as we finish off a little bit later on today. Apparently, the jobs numbers for this entire past 12 months are going to be revised down by about 1 million jobs. I honestly can't believe it. 1 million jobs, that's about 40% of the jobs that were proclaimed to have been created over the last year. So 40% of those are going to be wiped out with a stroke of a pen. Were they lying to us? Is it something to do with the elections coming up? Is the Fed involved with these figures and numbers and the clearly dishonest information that they're giving out to the public regarding jobs? And the fact that the Fed's been speaking about jobs so much, and that they've sort of highlighted it as their most important metric going forward into their decisions regarding interest rates and money flow and all that sort of thing. It's just very, very strange. So that number's apparently coming out today. I don't know how the market will react to that. The market's expecting it already because it's common news. So I don't know why the market hasn't reacted so far. Yeah, and we've also got the FOMC minutes coming out later on today. Much later on, so those will be interesting too, to see what the Fed is actually thinking behind the scenes. And that's all of that. So tumultuous period. I've taken my sides on this. I'm generally looking to short stocks, looking to short the dollar for now, but I think we could get a pullback on stocks and the dollar, but generally those are my directions: short the dollar, short stocks, long gold, long Bitcoin. Got quite a lot riding on Bitcoin, long on TLT, got quite a bit riding on that too. And then uranium, I'm long on, basically long on URA, long on UEC. You can see my entry positions there. Long on natural gas, we've explained that in detail. And Brent crude, I'm looking to short at some point. TLT, as I said, there's my trade entry position. We talked about it earlier. And then the Rand pairs, those are my short positions on the Rand against the dollar, and the Rand against the pound. Actually, the dollar Rand, the dollar pound. I continue to think that these have some potential for a decent downside move. If you are trading these, not many people do, but if you are, this is my sort of projected path and target for the dollar against the South African Rand, down to about 16. We're currently trading at around about 18, or just below 18 now. Actually, just below 18, and we've closed below 18 for the first time since July 2023. So that's more than a year ago that we've been this strong on the Rand, or low on the dollar Rand. The fact that the dollar weakened dramatically against the majors and the dollar index came off obviously also helped this market move down, or this chart. All right. A couple of other questions. How will lowering interest rates affect the markets this season? Yeah, Gabriel, I don't know. I mean, I think lowering interest rates, generally, most of the time when interest rates are lowered, there's a reason for it. The market is likely to come off, because the reason the interest rates were lowered in the first place is because there are problems in the market. So I don't think it's necessarily causative, the interest rate. If interest rates are dropped by 0.25 or by 50 basis points, I don't think that's necessarily causative of the markets dropping off, but it is a kind of a Pavlovian trigger because of the fact that the market often does sell off when the interest rates are cut. But that sell-off is probably already baked in a way, because they've cut in response to other fiscal issues and problems, economic problems, which the market has already seen in advance, that kind of thing. But yeah, I think we'll probably see the market coming off. Whether we'll get a rally to new all-time highs before then or not, I don't know. We might make a double top on the markets in general, on the NASDAQ and S&P, or we might have to make a fractionally new high, or we may have already reached the retracement high and we're going to be moving down from here. We'll find out this week, particularly with this jobs malarkey that's coming out shortly, the Fed minutes, and there's a whole lot of data coming out tomorrow, which we'll cover in our next video. But there's a whole bunch of economic data which is going to affect the markets quite significantly. So that's, yeah, in general, that's kind of what I think. Dr. Patel, thank you for your commentary on Natty. Clear and much appreciated. By the way, I appear as your subscriber market junkie in the Discord. Been following you since 2022. Thank you so much, market junkie, Dr. Patel. Fantastic to have you. I don't know the people in my private trading room. I don't know who they are on YouTube and on X, because everyone has different pseudonyms, but it's great to know that that's you. Fantastic. Okay, folks, any other questions? Now's your chance. Quickly type it up if you've got. I'll give you 2 more minutes. And in the meantime, I'm going to scan through the charts, see what's going on, make any further comments. If there are any, see the dollar yen's just coming off as we talk. And my target for dollar yen, by the way, I'm not sure if I mentioned it, is down into below 140 and then down into the 130s. And I think we could get down into the 120s even on dollar yen. It's not going to be a straight line. There's going to be a lot of faffing around, little zigzag here and there, perhaps some very sharp rallies, very sharp drop-offs. This carry trade unwind panic that caused the VIX to spike up to 60 and everything crash is not gone away. It's these sorts of things they're not flashes in a pan. They eventually will work out one way or another. And I think the way this is going to work out is a continuation of the dollar coming off, and potentially stocks and even gold and Bitcoin along with it too. So yeah, so that's my target on the dollar yen, into the 130s and maybe 120s. That's coming off as we talk. The euro and the pound are rallying back up again. Dollar's just dropping off. I know there are quite a lot of people very, very short on the euro, and in running into some problems with that. So we don't want that to happen with us, of course. Yeah, so let's have a look at, there's just one more thing I wanted to have a look at here. Yeah, so the market's open in about an hour's time. I'm not able to trade the names before the market's open. I can just see the pre-markets on my charts over at Black Bull. So we've got NVIDIA at pre-market, more or less where we closed yesterday. Same with Tesla, same with Apple, Palantir and NVIDIA, all more or less at the same price. Got an hour before the market opens, so those all fiddle around and settle down as they want to do so before the market opens. All right, Copper, Dr. Copper. All right, well, this is Dr. Copper. I'm torn between two things here, Dr. Patel. This is my original chart on copper. You've probably seen this before. This is where I thought we could get. We did actually get there, and we got there earlier than I expected, as you can see. I thought we might take a little bit longer. We got there a little bit too early. We bounced up from there. So that's just what I'm seeing right now, is just a correction so far to the top of this blob. If I move the blob to where we actually did get the bottom, something like that. So we're at the top of that blob now. We can take the question mark away, actually. So we're at the top of that blob, and at the top of the swing high over here at about $4.19 or 20. And I really don't know what's going to happen. There are economic pressures on copper because of demand from just general demand for stuff, for building, for wiring, for electronics, for AI, for batteries, for cars, stuff that we use mainly in electrical stuff, basically. Anything that's powered by electricity or operates from electricity has copper involved in it. It's also used as catalysts in some chemical conversion processes in industry. So a lot of industrial exposure to copper. So when industry turns down, we haven't seen huge signs of industry turning down, but we are seeing faltering, and that will affect the price of copper. We've seen that already occurring. But if there is going to be demand in industry and in the market in general, it probably will be in the electronics and electrical fields, in computers, in batteries, in wiring. Electricity transmission alone requires thousands and thousands of kilometers of new copper wiring every year. So anything to do with electronics, electrics, batteries, electronic cars, I don't think that demand's going to be as dropping off as quickly as general industrial demand drops off, if it does drop off. So that will, I suppose, be a little supportive of copper. So there's a potential drag coming up if we see a recession, demand drops off from industry. But there's also this potential sort of undergirding of copper from all this electronic demand, which is only set to increase. We're not going to use less electricity in the future. We're going to use more. We're not going to use fewer computer elements and chips and iPads and computers. I'm surrounded by electronic stuff, and I've probably got a kilogram of copper in my office alone, with the electrical wiring and the computers and the TVs and all that sort of thing. So I think that's going to remain buoyant, and it's not going to decrease. So that demand is going to carry on. And I'm not sure if this AI boom is over. So yeah, and then there's Bitcoin mining, and there's just so much demand for electricity and electronic goods. So I don't know. Personally, what I think on copper is that I prefer, if you want to go long, probably somewhere in this blob is a good idea. But personally, I think I'm going to wait for some of these stacked up green levels beneath us down into the threes. I think we could get sort of, I don't know, the low here was 392. I think 380 is good, but maybe 360, 370, somewhere at this first green block. However, I think if we do manage to hold here, maybe we can get a double bottom. We might have a go at buying if we get a daily reversal or a weekly reversal, something like that, at around about the $4 level. But I'm not going to be buying at this point here, because this is a potential reversal down to the downside. It's a recent swing high. If we look at this on the 4-hour chart, it's more clear. So there's that recent swing high. If I draw a line across there, let's put a rectangle. So if I draw that in there, yeah, so we're sort of just poking up into that right now. So it's not really the time to be looking to buy, but on a decent pullback perhaps. And that's copper. All right, and I think that's it, folks. Yeah, copper short, possibly. Yeah, maybe. I'm not going to trade this short. Generally, my idea is I'm still fairly. If anything, I'm bullish on metals and not bearish. So I don't think I'll be selling copper yet, but I'd certainly be looking to buy it on dips or on a push down and a retrace and a continuation of that move. Okay, folks. Have a fantastic trading day. Looking forward to it. I think it's going to be a really interesting rest of the week with Jerome Powell and so on coming up, and the minutes coming up rather, and this jobs revision number and all the news coming out tomorrow. Just to recap on what's coming out tomorrow, in case you don't know. And I could show this up on the screen as well. Just give me 1 second. Yeah, let me just switch this present. A little bit clunky. There we go. Electronic calendar. Yeah, so this is tomorrow. So today, by the way, FOMC minutes in 5 hours and 20 minutes. That's 8 o'clock in the night, my time. So 5 hours, 5.5 hours from now, FOMC minutes. I'm not sure when this jobs number or revision is going to come out. Oh, here we go. That comes out in 1 hour and 20 minutes. NFP annual revision for, non-farm payrolls annual revision. This is expected to be a million jobs revised lower. Is that possible? I don't know. We'll have to wait and see. I mean, that's pretty weird, but that's coming up in 1 hour and 20 minutes. But tomorrow, and then the FOMC minutes in 5 hours and 20 minutes. Tomorrow, we've got various bits of news from the Bank of Japan. We've got the Jackson Hole starting tomorrow, by the way. I forgot to mention that. Jackson Hole Symposium held at Jackson Hole. And Jerome Powell will be there, various super important leaders and Reserve Bank leaders from around the world. And normally what happens at Jackson Hole is Jerome Powell says something which moves the markets dramatically. It's his opportunity to say something off script or off piste. And so he's got everyone in there and he's able to say something dramatic and startling and stunning and revealing. And mostly the market has a terrible crash. Last time it had a terrible crash. I think there's been one occasion where we had a massive rally. But generally, the market will move quite dramatically, and that's tomorrow, and that starts at, well, tomorrow morning sometime. And then we've got more stuff from the Bank of Japan, and then look at all this news. We got the HCOB manufacturing PMI. This is all out of Europe. A lot of European news, and then we've got the S&P Global Services from Britain, all super important. Then we've got the jobless claims. That'll be following on from what we hear today about the NFP revision, which will be startling no matter what it is, if it's anywhere near a million. Jobless claims tomorrow, S&P manufacturing PMI tomorrow. That's another big one. And then, unemployment rate and so on. And then the 15-year mortgage rate and a couple of other things down there. So a big day tomorrow. And then going into Friday, also a lot of data on Friday and a couple of Fed speaks, new home sales and that sort of thing on Friday as well. I think we've got some home sales today. Yeah, existing home sales today, also another big number. So we've got home sales, we've got jobs, we've got the NFP revision, we've got Jackson Hole starting tomorrow, and we've got the Fed minutes coming out a little bit later on today in 1 hour and a half. 5.5 hours, that is. So a lot's going to happen. It's going to be an exciting week. I'm really looking forward to it. And I hope you are too. Marcin, we've talked about gold already. I think you can rewind this, or when we finish it, you can go through gold. But basically, long on gold. We just went long on gold again this morning. Took a new fresh long position after cashing out at the top. We cashed out, actually not quite at the top. We got out at 25.20 after that long march out up from the bottom. 2365, we got out at 25.20, and we've just bought now again much closer. I think at around about 2505, 2503, somewhere around there. So, but generally looking for gold to move up to about 27, maybe higher, maybe 28, maybe 3000, maybe 32, but we'll start with 27, 28, somewhere in that region. Pleasure, Marcin. All right. Okay, folks, have a wonderful day, and I'll see you probably in another live stream tomorrow. Once again, if you haven't subscribed, I really appreciate it. And below this video, there's a link for you to sign up for the early bird list for the Swing Trading Blueprint course, which starts in early September. So just, even if you don't want to join the course, put your name on the list just in case you change your mind. And I'll see you very shortly in the next video. For those of you in my private group, I'm going to be putting in a couple of trades shortly today, a little bit later on. So in about 45 minutes time, keep an eye out on the trading room for those trade signals.